Well, the mortgage mess goes way beyond the robo-signing scandal, the foreclosure moratorium, and even the fallout on the housing market. There is still a huge unanswered question. After all the slicing and dicing, who really owns the mortgages and who has the legal right to foreclose? Diana Olick is working a very complicated story for us. Hi, Diana.
Hi, Sue, and it certainly is, so please bear with me. You can discuss and investigate robo-signing all you want, but it's what that robo-signing may be covering up that's really the biggest issue for banks and mortgage investors going forward. At issue is, bottom line, who owns the loans, who holds the mortgages, the note and on the mortgage, and the securities into which these mortgages were bundled. Now, real estate law is governed by states, so it's going to vary state to state. But in general, a mortgage has two parts, the mortgage and the note. The note is the IOU, the borrower's promise to repay the debt. The mortgage is the document that says the house is collateral for the note. Now, the note is crucial because there is your evidence of the debt. It's supposed to be held by a trust. Otherwise, the debt just doesn't exist. Now to securitization. That is bundling all these mortgages and buying and selling them. Take a look at the chain here and how it's supposed to work. That is, from the origination of that loan through the depositor, the bundler of these loans, to the borrower, the final resting, to the trust, which is the final resting place, and the security that relies on that trust. That's where the investors are relying ago. About a decade ago, the banks, including Fannie and Freddie, created this electronic system, MERS, which acts as a representative of banks, supposedly keeping all the records and changes of ownership. But in all that, the actual notes and mortgages, well, they got lost. And according to the law, you need those papers in order to foreclose. I'm told we didn't actually have that full screen out there, but I was just trying to show the chain of where all the ownership and where these documents are supposed to be. When you go electronic, you don't have the documents anymore, and that's the biggest problem. Tyler?
All right, Diana, hang on there, and because we're going to talk more about how big this foreclosure problem actually is. And to do that, we're going to bring in Josh Rosner. He's a managing director at Graham Fisher. He says he has doubts about the validity of nearly all securitizations. And Howard Glazer, former counselor to HUD Secretary Andrew Cuomo. Glazer warned in 2008 that servicers were following a prescription for failure. Welcome to you both. Mr. Glazer, let me start with you. I think what is not in dispute here is that many of these people, of the homeowners, were in arrears on their payments. What is in dispute is who actually owns those loans and mortgages, as Diana pointed out. So who does, and thus who has the right to foreclose?
It's quite amazing that we're even asking that question in 2010. You know, what we really have here is a clash between the 13th century system of English property rights with fee simple and the statute of frauds and those things you learn in law school that has served very well in this country, now in a clash with 21st century technology and efficiencies. And along the way, we lost the fact that the writings and the formalities created certainty in property rights that established a lot of confidence in the system of buying homes. And the fear today, what's really driving a lot of the uncertainty right now, is the fear that that could be unraveling a little bit. So incredible that we're even asking the question. We forgot to do the formalities, and the writings are important. They're not just legal niceties.
Mr. Rosner, you know, when you slice up these documents the way I understand securitization to have done, can you ever hope to really find out who owns what in this process?
Well, the custodian should have all of the documents, should have all of the original documents, and essentially what you have is a chain that has to happen.
Who is that custodian? Is it MERS, or is it J.P. Morgan with whom I have my mortgage, or who is it?
It depends on a deal-to-deal basis. You have the bigger issue is, does the custodian hold the note, but more than that, has it been assigned correctly each step of the way? So before the trust can be said to own it, there has to be a delivery and acceptance receipt from the originator to the sponsor, a delivery and acceptance receipt from the sponsor to the depositor, and one from the depositor to the trustee. Then the custodian has all of that and the original notes, and has to have all of the original documentation. That seems to be problematic here, and a lot of the original documents don't seem to be there, and there seem to be broken chains along the way.
So, Josh, how big do you really think this is? I mean, on my notes it says that you think basically almost all securitization has to be questioned at this point. Is that a correct read or no?
That's not a correct read. The correct look, a part of what happened is most of the loans were transferred to the trust, ultimately from the originator to the trust, in blank name. You can do that, but that makes it a bearer instrument. And when it becomes a bearer instrument, you then have, as Howard pointed out, the formality of each step along the process, making sure the assignment was done correctly. Had it originally gone from the originator or sponsor to the trust, where it was assigned specifically to the trust, you wouldn't have had that problem. Frankly, MERS, which is a well-intentioned and smart idea, seems to have actually mucked it up a little bit in terms of the way we've seen the system break down in terms of the documentation.
Right.
At this point, you know, we've got the servicers who've been fighting mortgage note investors on putbacks of individual loans on reps and warrants for the past couple of years, refusing to open up the credit files and refusing to show what they have, and you start wondering if this isn't part of the reason.
Right. Diana, why don't you weigh in terms of what you've heard, guesstimates or estimates on how many of the foreclosures would be considered illegal?
Well, that depends on what the court deems illegal. I mean, look,
Right.
The foreclosures that were there, bottom line, have to do with people not paying their mortgages. Now, I'm sure there are going to be examples out there of the odd person who didn't have a mortgage and got foreclosed on, or some person who got pulled in some bizarre way. But 99% of these foreclosures are simply people who did not pay their loan. So are the foreclosures legal? Are people allowed to stay in their homes without paying their debts? No, they're not. So they are legal. When you get down to the paperwork of it, that may in fact become more of an issue between the investors in these loans and the trusts and the lenders and the banks, rather than having the borrower, because at some point we have to get to the bottom of this. That is, if a borrower's not paying, do they get to stay in their house for free?
This is such this is such an unanswerable question then. I mean, it seems like there's going to be months and months of legal wrangling to try and work all of this out. Howard, when do you think we'll get any kind of a clarity on this issue?
Well, the sooner that we get an independent monitor and uniform standards for reviewing the foreclosure files themselves and the foreclosure process itself, the better. I think one of the problems a lot of people in the industry and the media have right now, it's very hard to rely on the representations that are made by the servicers, their vendors, and the banks, because they haven't always been above board up until now. And so I do think there is a federal role here to establish an independent monitor to look at this very promptly, sort out what is a problem from what isn't a problem, and restore confidence in the system. I do disagree with Diana on one point. I think that when you begin to scratch the surface of these loans, both on the origination side and on the foreclosure side, a lot of gremlins are going to come creeping out. But we owe it to the process to make sure that happens.
What kind of gremlins?
Well, in the origination process itself, I'm not sure it's quite so cut and dried. Remember, you've got loans that were made with no documentation at all, and one of the reasons for the putbacks that Josh referred to earlier is that whatever documentation there is on the loans turned out not to be a proper representation of what actually was happening with the asset itself or the borrower's income, et cetera. And so you've got origination problems as well as these issues with the assignments that you mentioned. So I think that the sooner we get to an independent review, the better.
And Diana, we have to take a quick break here. Thank you very much.
Josh, let me start with you this time. Diana made the point that essentially this is a state issue. This is not at the federal level. Therefore, it is quite difficult for the administration to come in and try and offer some solutions to try and fix this. So who can fix it and how?
Well, unfortunately, I really want to break this into three issues. One, assume all the documentation was correct, except for the back end, the foreclosure process, robo-signer. You're going to see those documents resubmitted, refiled correctly, and the foreclosure will go forward. If the front end documentation wasn't correct, what you'll end up seeing is questions about who owns it, and therefore you won't be able, even when you fix the signing of the foreclosure documents correctly, you won't be able to go and foreclose easily. That's the unknown, is how many of those. The third issue, as we talked about, is the putbacks of individual loans that didn't meet rep and warrants. There are three different issues. They're interconnected. And at some point, if the borrower is able to say, you can't foreclose on me because the front end documentation, the original documentation, doesn't make it clear who has the right to foreclose, what you may end up seeing is investors in mortgage backs from the beginning, back in, let's say, 07, who bought a note at par, sold it at a loss in 08, might say, hold on, if the borrowers demonstrated that the trustee never owned the note, doesn't have a right to, then I took a loss on something that I didn't own, so I'm going to go back and sue the trust. So this is an enormous problem.
Yeah.
We do need a third-party to step in and go and start reviewing
Who would that
the
third
original
party be?
documentation.
I think Howard made that same point. Who would that third party be?
Well, that's a good question. I do think that is the constructive role for the federal government at this point. And I do think...
Howard, what about, though, it seems as though the whole process from beginning to end needs to be revamped in the way that it is done, because there are too many different ways and too many for it to go off the tracks, as it obviously has. And perhaps we need to streamline the entire way the system works, or is that too extreme?
No, it's not too extreme at all. At least from a going forward basis, we're going to need some more standardization and uniformity and oversight. You know, we just passed a financial regulatory reform bill that redid the whole securitization process as well as the origination process, but didn't really look very much at these issues of how property rights are transferred and foreclosed upon. Foreclosures are primarily determined by state law. That means there's 50 different ways to do this, and your foreclosure process in a non-judicial state and a judicial state are completely different. It's 2 days in one state, it's 3 months in another, and all the protections are different. Wow. We have a national housing crisis, a national foreclosure crisis. We're going to have to look at some national standardization of the foreclosure process if we want to return certainty for both borrowers and investors.
Diana, I know you want to, excuse me, I want to get Diana back into the conversation, but I want to ask you, Diana, one of the things that's buzzing around in my head here is a fear that I, who haven't been foreclosed upon, who pay my notes and do all that stuff, that ultimately when it comes time for me to sell my house, that this kind of sort of snare that is mucking up the system, to use the word that was used earlier, is going to entrap me somehow, and that I'm not going to be able to sell my house.
And I'm guessing there are an awful lot of folks out there wondering the same thing, and that comes down to the title insurance issue. Look, you've got a lot of title insurers out there very concerned because they're the ones who take the losses if the title to that home is not free and clear. Now, the bulk of us would probably be able to sell our homes because we'd pay off the mortgages in the sale. So who owns it is really not the issue once it's paid back. It's really when you're in trouble on the mortgage. But again, it's that sense of confidence, that lack of confidence in the housing market, because, look, 1/3 of the market was sales of distressed properties. Now, all of a sudden, that's gone. So now you've got 2/3 of the market left. That is a very wary potential buyers and sellers out there worried that this entire scandal is not only going to bring this entire thing to a halt, but it's going to lower home prices in some way because it's going to keep folks out of the market. It's not going to clear those foreclosures through the system, which we need to do. And so where do you go from here? How do you reinstill confidence?
We got about 20 seconds left. Josh, do you want the final word?
Well, no, I was just going to say we also have to fix the securities side, which is standard pooling and servicing agreements, standard definitions of delinquency and default, standard definitions, legal definition of true sale. None of those have been dealt with over the past 4 years. That is a root of the securitization side of this crisis. The federal government does have the ability to address.
Okay, to all of you, thank you so much for joining us today.